In Nigeria, we saw the market fall back a little bit after the recent gains. The NSE Osho Index closing at 34,339 points. And the market was dragged lower by the fall in shares like Stanbic IBTC, ETI, Guinness Nigeria, Unilever, and of course Nigerian breweries. So the year-to-date change for that market now standing at 22%. And moving on to the fixed income space, we've seen recent volatility in the bond market, and we'll cross now to Stanbic IBTC, where Steve Osho is standing by to give us a perspective on that market. Steve, it's good to have you on our show. Like I did mention just now, we've seen a bit of volatility, and what I'm hearing is that that is linked to foreign investor interest and of course speculation ahead of that with respect to Nigeria's increase in Nigeria's weighting on the JP Morgan Emerging Markets Bond Index.
Sorry, Wole, I'm not sure I can hear that question clearly.
All right, I wanted to get your thoughts, if you can hear me now, on the volatility we are seeing in the bond market today.
Oh, okay. We've seen some kind of reactions on secondary markets on bond. That's on the back of the news that came to the market that the JPI, the Nigerian weighting on the JPI, actually been increased from 1.5% to 1.8% of the total fund in that index. And that galvanized activities in the secondary market, where we saw a lot of reactions, a lot of buying coming from both the locals and the offshore. But thereafter, we noticed that the price action actually could not work in tandem with the volume traded in that part of the market, and we've seen some reactions, some kind of correction after initial rally from the beginning of the week.
Okay, if we move to the shorter end of the yield curve, we've seen T-bill yields at about 12%, while bond yields, of course, are closer, less than 11%, so a bit of an inversion there. Why do you think we are seeing such an inverted yield curve right now?
I think the major reason for that actually being the supply that we've been seeing on the short end of the curve. We've seen a lot of liquidity in the secondary market, which the CBN has been trying to mop up through via issuing of OMO bills. As the supply on those particular securities actually increasing the secondary market, it's caused some kind of gapping in terms of interest rates that it's seen in that part of the curve. And if you look at the yields on bond generally, takes for example the 5 to 10 years actually been actively traded in the secondary market, the supply there compared to what is seen on the short-dated bills is a bit limited. I think that's just the major reason for the reason why we're having some sort of inverted yield curve on the secondary market.
Well, in terms of the liquidity, I think the central bank seems to be struggling a little bit to mop up liquidity, and I want to get your thoughts on why that is the case. Of course, we've seen OMO auctions virtually every day over the last few, maybe the last 1 or 2 weeks, but the participation has not been very strong on a daily basis. I want to get your thoughts on why and why the central bank seems to be having a challenge to mop up that liquidity.
Sorry, participation where? I'm not sure I heard that.
In the OMO auctions, the daily OMO auctions, it hasn't been strong every day, although I think it has picked up recently.
Oh, okay. I think one of the reasons there was because there was a kind of communication to the market, although not officially communicated in terms of issuing a communique, that the participations from offshore, the sales of automobiles to offshore guys will be a bit, should be curtailed. So what you see generally is actually investors from banks and PFAs going to their windows now. And as we have so much of liquidity in the system, ranging between 300 billion to 500 billion, so the continued issuance of automobiles are actually being a bit much for most of these banks and PFAs that they could take. So, and at that point, a lot of people are a bit cautious and say, okay, the possibility is there that for us to see a slight increase because of the supply we're seeing on this part of the curve. I think that explains the reason why we've seen so much limited interest coming through from PFAs and banks.
Okay, but if we try and find out why the liquidity is so high, I want to get your thoughts on that point. We know there have been quite a few maturities in the fixed income market. That is clearly a factor. But on the other hand, could it also be because of disbursements or from the excess crude account?
Most of the liquidity is actually coming from the maturities of automobiles that have been issued in previous months and even late last year. Some of those bills were issued for like 30 days to about 3 months. So as those maturities are actually spilling back to the market in vis-a-vis the injections of the public funds in terms of cyclical FAC allocation. So that's actually compounded liquidity in the system. And again, with some of the offshore interests coming through to purchase your bonds and bills, we've seen a lot of liquidity coming through from that angle too. So a lot of this actually responsible for the liquidity we've seen in the secondary market. And that explains the reason why the CBN tools have actually been aggressive in the mop-up of this liquidity.
Okay, so despite the heavy liquidity, I think the good news is that the naira has strengthened quite a bit over the last few sessions, currently at 157.70, depending on who you ask. And that is linked to dollar supplies from the oil majors. But the big question is, how sustainable is the current strengthening of the naira?
Sorry, Wole, I didn't hear that again.
I want to get your thoughts on the naira, how strong it has been recently, and how sustainable you think the naira strengthening is going forward.
Okay. Okay, I think as long as we're seeing so much support coming from oil majors as we've seen for the past few days, at the beginning of the week we opened at 158.50.60, the high, and at the close of business yesterday, the market appreciated to 157.50.60, which is being supported majorly by the inflows we've seen from oil major sales. I think as this support continues, as we continue to see maybe slight interest coming from the offshore who are buying into securities, and some oil major sales in terms of FX, and the CBN supplies too, and their WDAS windows still remain constant. I think the band of 157 to 150, we might actually see slight depreciation in days ahead if the supplies actually cease from coming to the system. But I think the band of 157 to 158 levels will actually be maintained in the long run.